Hello folks, so hope you all are doing good. So let's start the trade review I have shared on Telegram. Okay, if I'll get some time, then I will review the trade I took today. Okay, so let's start from the daily time frame. In daily time frame, price rejected this low. Okay, rejection means price fails to close above highs and lows. Okay, uh, so this I saw the rejection. Okay, and also price closed above this candle's body high. So this is how the potential trade idea form. Okay, and I was targeting this high, which is our Tuesday high. Okay, so now let's go to the 4-hour time frame where our picture will become very clear to you. Now what did I saw that we have a imbalance right below it. Okay, and the first and most important thing is that price rejected these lows. Okay, price rejected these lows, and it rejected these lows, and after rejection it shows us the expansion. Okay, and if you know if you have idea about the what is optimal trade entry is, so if you don't know, I will explain here just now. Okay, so basic logic behind OT is that price will come and take out this low. Okay, and it will show some expansion, and after this expansion I want the price to close multiple candles. Okay, just above it. Okay, and we should have some sort of drawn liquidity just above it. Okay, so the idea is that if price can come inside it, okay, and then you can tap this. So this will become my first leg of expansion, and this will be my second leg of expansion after this liquidity is taken out. Okay, so this is the idea. Now come back here. What did I saw? That price broke this high. Okay, and we have a multiple closing. We have multiple closing here. Okay, the moment I saw the multiple closing here, so this is how a trade idea is formed. Okay, and look, we have a multiple confluences inside this area. Okay, and there we go. We have a quote unquote a breaker block. Okay, and also we have a order block, right? A order block. So what we can do, we can use a fib to mark the premium in discount. Okay, we can use the fib to mark the premium in discount, and there we go. We got a we got discount here. In discount we have a order block. So my idea was that to tap this order block. Okay, then only I look for the entry. Okay, and this order block also have this breaker in common. Okay, this breaker in common. So that is the potential order block, potential area where I will look for the entry. And also if you see, this is my high probability order block. Okay, this is my high probability order block. Why it's a high probability order block? There are multiple reasons, but one of the few reasons is that it's a bulky candle. It's a bulky means thick high volume candle is my high probability order block. Okay, and it also took out the liquidity, broke the structure, and have fair value gap. So multiple confluences I have. So that's why this is the potential point of interest I will be looking for longs. So let's go to the lower time frame. In 1 hour time frame, what do we have? So in 1 hour time frame, we have the candle came and again one more interesting stuff I will say now. If you see here, we have a in this pink area point of interest, we have a 1 hour fair value gap. Okay, we have a 1 hour of fair value gap. Why this fair value gap becomes very important is that one thing I have said multiple times, that the fair value gaps which is formed inside a order block. Okay, I mean the order block must be a higher time frame order block. So the fair value gap which is formed inside the higher time frame order block is considered to be as a high probability order block, high probability fair value gap. Sorry. So if you see this whole pink area is my 4 hour order block, and inside that order block we have a fair value gap. So this fair value gap becomes very important. okay, for us. Okay, now come to the time. At what time this is for me? It's a 6 o'clock. So 6 o'clock is not a good time to take a trade. Okay, generally I look for entries in New York after 8 or 8:30, where potential where news releases happens. Okay, so there we go. We price fails to close below this candle low. Then only it confirmed my idea that yes, now it's looking good, so I can look for the entry. So you can go for the lower time frame. Okay, basically you can go to 5 minute or 15 minute, okay, and look for the change in state of delivery. Okay, so the moment the price closed below above this candle, we got the change in state of delivery. Okay, we got the change in state of delivery. So then you can take a trade. Okay, there we go. We also have a price. If after price closed above this candle, then you can also have a entry here. Okay, inside these two candles. Okay, and putting the stop loss just below it, inside this two candle. Okay, just a moment, I have to remove this, come back here, and there we go. This is how. Now look, a real expansion occur only after 8:30. Okay, so this you could have entered inside this blue box. You could have put the stop loss just below it, and there we go, easy peasy trade. Okay, this is how you have to think. Look, I have put together everything in this trade idea. Okay, I started from the daily time frame, then I came back to the 4 hour, 1 hour, and 5 minute, 15 minute for the executions. Okay, this is how you have to look. This is not the only process, but this is the right way. When you take a trade with multiple confluences according to higher time frame PDRA, so that becomes the high probability trade you can take. Okay, now let's come back to today's trade I took. Okay, today's trade was pretty easy. It's not something which is nobody knows. Okay, this was the idea. If you see, I am taking the range of this candle only. Okay, considering the 1 hour candle range. Okay, look here, it is not clear. Now come back to DXY, it will become very, very clear to you. Okay, in DXY we have a range. Okay, let me show you. Okay, taking this candle as a range low and range high. Okay, this is my candle range high. Okay, and this is my candle range low. Okay, I'm not looking for the bigger targets. Okay, but what did I saw is that we are ranging below this range high. Okay, so it's easy peasy AMD. So this is accumulation, we'll have a manipulation here. Okay, and there we go, we got the distribution. Simple stuff. Okay, but as I do not have any higher time frame PDRA. Yes, we have a here, but it's very, very far away, right? It is not created. It is created around 2 to 3 days ago, 5 days ago. That's why I always look for the newly created PDRs to have confluence. Okay, so I did not took the turtle soup entry. I waited for the confirmation. Okay, now come back to this Euro USD. Here, according to this idea, according to this logic in my mind, okay, I have a Asian range here. Okay, this is Asian range, this is the Asian range, Asia range, and considering this candle only as my this candle only, these three candles, take these three candles only. This three candle is my range high and low. Okay, look, you can consider candle as a range. Okay, so this candle is my range high. Okay, and this candle is my range low. Okay, and we have multiple candles inside this range. Okay, so we got accumulation, we got manipulation. Okay, look, one interesting thing is to look for while trading this thing is that is you have to see that whether the candle is closing below these lows or not. Okay, in higher time frame, candle should not close below these lows. Okay, and that's why closing is very very important, you know. And so if you see around 3 o'clock, okay, or 4 o'clock, 5 o'clock, so this at these times you will get good entries, because at that time you will see the closing, you know, of 1 hour candle or 5 hour candle or 5 minute 15 minute candle. So this candle will be closing at that time. That is why these are the times where you will get good entries. Okay, so this is pretty much about that trade. Okay, simple AMD by applying range theory. Okay, range high, this is the accumulation, manipulation and simple distribution. Okay, this is my range high, this is my range low. Okay, aligning with my dxy. Okay, aligning with the idea I shared in dx. This is my bread and butter model. Okay, this is how I use. So that's all for today. So wait for the next trade review.